please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to a fresh new edition of Taking Stock. This is the show where we take stock of the week which has gone by, tell you what moved, what did not, what led the moves and what were the letdowns. We also, of course, prepare you for the week which is coming right up. I'm Prashant Nair. With me is my colleague Surabhi Upadhyay. Surabhi, hi. I'm calling it the 0.5% week because everything seems to be up 0.5%. The Nifty, Sensex, Bank Nifty, mid cap, small cap, you know, on the dot, almost 0.5%.
I would completely take that. Absolutely spot on, because that's the kind of week we've been. I would say it's just yet another week and yet the same ranges. We keep harping on the same numbers, but we really can't help it because this market, at least at the index level, has once again fallen. Or rather has failed to break through those key levels. Just quickly to wrap up trade and what we've seen this week around. Yes, there's a 0.5% increase on the Nifty, on the Sensex, mid-cap slightly lesser than that. But the key point is that the market is failing to show traction as it's approaching the higher levels, the higher side of this range. The 10,800 zone is continuing to be a big issue for the market. It did cross the 20 DMA at 10,755, but above that, sustaining and building is proving to be a critical issue. So we've had a lot of big events this week. We've had obviously the Reliance AGM, and some of those reverberations were felt through the market on individual stocks, whether it's optic fiber companies, whether it's MSOs. So those were some of the key news points. Auto sales came through. Autos have really been the sector of the week. What a rev up we've seen on stocks like Bajaj Auto, Maruti, even the laggards like Tata Motors, for instance, having a fairly good session on Friday. So auto has been good. We've seen banks have been sort of really muddled and mixed all over the place. There are some heavyweights like Reliance itself that have helped this market. If I talk about the key performers of the week in terms of stocks, then you have to look at Bajaj Auto, Maruti, Hero, of course. And then you also need to count in something like an RIL. It's had a very choppy week, but the net result is still a 0.5% increase. And then there are some biggies like ITC and TCS that have added to the top side of the screen. Bottom side, you will find names like Infosys. Very interesting. A lot of selling on the stock. That was another story of this week ahead of the numbers coming through. Some of the metal names like Vedanta, Hindalco were out of favor. And that, I guess, continues to be because the world is still fixated with what is happening with these tariff talks. Of course, domestically, Prashant, we will be talking about the micros, the earnings. But having said that, I think there's no taking away from the fact that the global news points between China and the US, they continue to dominate mindspace.
Oh, yeah, absolutely. And, you know, since you were talking about locally what happened, I mean, earnings kickoff, right? TCS is the first one which reports on 10th. So that is the first half of next week. So we'll get previews, etc. in a bit. But globally, I mean, it's essentially tariff and trade talk which continue to dominate near-term market positioning. So, I mean, you know, shots have been fired. I think the trade, you can call it tariff war or trade war, whatever you want to call it, but it's on. And both sides have pitted against each other, that is the US and China, very clearly. So any further developments in terms of tweets from Trump, etc. over the weekend will be important to watch for how things are taken as we come back next week. Because, I mean, the US, Mr. Trump has specifically said that we are ready to impose tariffs on another $200 billion if China dares to retaliate against our $50 billion worth of tariffs. And China has retaliated. So will we hear something and will that have an impact on when we come back to trade? I think we'll have to wait and watch. Okay, let's just now look at the global setup. Let's start with equity indices. And the weakest link seems to be Asia. So towards the close of the week on Friday, things did look up. Hang Seng big rebound from the the lows. You had the Shanghai, which looked a little better. But I mean, broadly speaking, all the big markets, the Hang Seng, the Nikkei, and the Shanghai, they are looking weak. I mean, at least on charts. You look at the US market, I mean, it's doing okay, it's middling along, but the fact is that big resistance is about 2,802, 2802. It's the trend high, and it is not finding it, it's not finding it itself to cross that in any significant way. Actually, we've not crossed it in any meaningful way so far. I mean, you know, you cross that, then you start to talk about levels like 3,000, etc. It's not happening. So price action, just under 2,800, a little concerning. Okay, how's the dollar set up? Now, this is interesting. The Bloomberg Dollar Index, which essentially many consider to be a bit of a leading indicator for what the dollar index, the DXY, actually does, is actually broken down a little bit. You know, the Bloomberg dollar index actually was a precursor for the dollar index breakout in the month of April, a few months back, and it is leading on the way down. Will the DXY actually follow on the downside? We'll have to wait and watch. It's not exactly all bad news. I mean, a stronger dollar is not good news for commodities. It's generally not considered good news for emerging markets, especially if the strengthening is happening against emerging market currencies. So that is the dollar. We'll watch that space. Metals by themselves. I mean, of course, if the dollar starts to crack, dollar price commodities will not look all that bad. But by themselves, I mean, you've got weakness which is sort of crept into commodities like copper, zinc. I mean, actually, the broader LME index is also, at least on charts, seeing a bit of a breakdown. And there is, of course, expectations that, I mean, as far as yields are concerned, they're going to continue to trend lower, be it the 30-year, the 2-year, and the yield curve itself is going to get flatter. Never really a good sign. We're not talking about inversion or anything, but it's getting flatter and flatter, the difference between the 2 and the 5 or the 2 and the 10, etc. So this is essentially what the global setup is like. I mean, the takeaway, it's not really looking very comforting out there. Any of these indicators is not looking all that great. I mean, of course, things could change. It's a fast-changing environment out there, but the indicators aren't really pointing upwards, northwards. The fund flow picture, I've got the data from EPFR, the latest data which was released today by EPFR, and we've seen global emerging market funds lose about $1.5 billion once again, and emerging market funds have been the biggest sort of source of outflows we've seen for many weeks on end. So again, it kind of mirrors what's been happening with underlying equity indices, etc. here.
Okay, that's the setup. So, well, whichever way you cut it doesn't look like a very bullish set of cues, at least for now. But let's get more insights into this market and some perspective going on what's happening all around us. We have Ajay Srivastava joining us on the show this week. Ajay, great talking to you as always. Thank you for taking out the time and joining in. Now, trying so hard and not able to break through on the upside. That's been the story of this market for almost 1.5 to 2 months. Are you getting any more clarity in terms of the bigger direction, Ajay? Is there a clear indication that we're maybe set up for a breakdown? Or do you think consolidation pretty much is going to be the name of the game even for the rest of this year?
Surabhi, one must give credit to this market. The fact is that we have not broken down in spite of all the walls of worry, in spite of all the FI selling, in spite of all the negative news flowing in, the trade wars, the Trump wars, the China issues. The fact is the market is not breaking down. And I think that's great strength and resilience in the market. Maybe liquidity, maybe just the fact that people are trapped into the market, they don't want to get out, or whatever you can call it. But the fact is the market is holding firm, which gives you a good idea that if so much pessimism and the market holds, you're not in a bad place to start with. I think that's the one part. The second part is the good stocks are holding firm. The good part of the market is it's not the speculative stock holding firm, it's not the marginal stocks holding firm. They are going all over the place. It's the good stocks holding firm. It is the same old TCS, same old HDFC Bank, same old Kotak, which are driving. Looking at quality holding this market together, not speculative forward buying. These are not stocks which see mass selling even if a big downturn happens. So to that extent, this is what is holding the market up. Now the question is, where do we go from here? I think where we go from here is that now we are seeing the first big churn taking place of portfolios, whether mutual fund, individuals and all, moving into large caps, and that's giving the liquidity impetus to the large caps and taking away a lot of stuff from the mid cap. I think that's what churn is now going on. And I think this churn will only accelerate in the next 30, 60 days because as the results come in, and we are very confident, we will find that the large caps have gained phenomenal traction in this market. The small and the mid cap will find it tough going. So if the results come in, small mid caps have mediocre results, the migration will go much faster and accelerate much faster. So you could see serious pain in some of the mid cap if the results are not expectations. So hang on to one. This is going to be a rough ride in the next 45 days of the results. I don't think large cap will give you the big bumps. It's a small and mid cap which may surprise you to the downside.
Okay, but that has already been happening, right, Ajay? As you said, that good quality large cap stocks are holding the market, and mid caps have had it pretty rough now for weeks. So incrementally, so essentially you're saying that will continue. In all likelihood, with results also coming in, that movement will continue.
See,
yeah.
See, I don't think, Prashant, the capitulation has happened in the mid-cap. I don't think so. I think people are holding on. People have not sold enough, except people under margin pressure or under ASM pressure. They've not sold enough. I think the large, big, they're waiting for to see the results will come out. Are they being satisfactory? And I'm quite sure the fact that leave aside the infrastructure stocks on the road building, etc., which might have a good run even in this quarter. The others are waiting for a trigger. And if the trigger of the result does not come through, then the last need to hold the share goes out. Today, I don't think people are holding most of the stocks on merit. People are holding most of the stock because they're trapped into at a price and they don't want to book a loss. So I think we are waiting for this quarter to see the final capitulation. Yes, you've seen selling. Yes, you've seen 30-40% fall. The capitulation has not happened. This quarter is going to clean it up. And post this quarter, I think you're going to see a very healthy market because good stocks will have good following, etc., and the bad ones will have not many takers. So I think, in a manner of speaking, things have happened. You're right, absolutely. But the real test will come in this quarter when the results come out, because then the final take will be taken that this stock is good enough to hold for the next 1 year or so. And that's the big call. These results will make it for investors.
So, Ajay, in that case, what is the best way to play what, as you're saying, promises to be hectic and perhaps highly volatile next 3-4 weeks as we get through the earnings sprint? What is the best play? I mean, should you sort of stick to buying some of the quality names? I don't know, maybe autos, for instance. That's already happening. That's happened last 2-3 weeks. Auto stocks, good sales numbers, higher MSP, and we're seeing the traction in prices. What about IT, where expectations are already running so high?
See, Surbhi, I have a feeling that I don't think there is too much incremental money going to come into this market in the next quarter or so. I think it's going to be majorly churn. Yes, SIPs do come in, and how much that comes in, I don't know. But whether the slowdown or not, we don't know. I think if you really ask me, there is not such a large chunk of money waiting to enter this market in this quarter. So it's not going to be incremental. It's going to be churn of the portfolio that's going to happen. So if one expects that there'll be large-scale buying, I don't think it's going to happen. I think people are going to dip into and churn the existing portfolios as either the price reaches an index where they can get out or book some profits, or the fact that you lost hope and then you move it out of anything that you book a loss and you move to something else. I think that's what's going to happen. And what needs to be done here is very important. I think let's take spaces. Let's take a pharma space. A lot of people have neglected very easily the MNC pharma space. That's done phenomenally well, should do much better in the next 6 months or 9 months to come. Under American pressure, I don't know how far, including India, can keep putting price controls on drugs coming out of the United States of America and get away with it. So I think these people are ready for the biggest run of profits in the history of their operating in India. So you'll see MNC pharma block, very underinvested by most people, would again see a fold on drugs coming out of the United States of America and get away with it. So I think these people are ready for the biggest run of profits in the history of their operating in India. So you'll see MNC pharma block, very underinvested by most people, would again see a phenomenal run. When you say IT, yes, IT mid-caps have reached certain stage, but I think they still got a way to go. I think you've seen things like Tech Mahindra is only one which climbed all the Bari. You've seen Emphasis, you've seen Alexei, etc. They are reaching a good point, not a bad place to even enter now. So yes, TCS, we thought 1 month back was a bad place to be. It does 11% return, if I'm not wrong, in this week itself. So, so I think it's nice to say, yes, the run-up has happened, but I think there are several pockets where you can still get bargain. Look at commercial vehicle. You see Ashok Leyland, it came back. It gives you an opportunity to get in again. So it's not all that stocks have all gone up. They're giving you correction. They're giving you chances to buy at decent prices. And I think that's what the need of the hour is, that look at these stocks and try to get in if you haven't been there when the news stories coming out. So whether it is consumer also, Nestle in a week back, it was 9,700, is back to 10,000. So market is letting you come in and buy at various points of time. And you've seen the gambling stocks went down drastically thanks to the new law panel recommendation, has come back again a little bit. So, so yes, theoretically, yes, lots of buying has taken place. But in this ambit of buying, you're seeing opportunities again available to investors who are willing to be aggressive with their portfolios and churn it.
Fair enough. Ajay, but you give the example of Nestle or large caps, etc. I mean, the index itself, right? I mean, was only about 5% away from its lifetime high. So it's not as if there were any large, meaningful corrections. I mean, in some cases, maybe there have been, but far and few in between. I'm talking about large caps specifically. So, you tend to make a fair bit of money when you buy, so as to speak, deep discounts. Well, that hasn't emerged, or has not emerged so far in large caps. So what is the strategy really? You said be aggressive.
No,
so far we've heard kind of the opposite. That, I mean, this is the year to be a little cautious. Go on, Ajay.
No, okay. No, I think it has happened. If you just take example of Maruti. Maruti has gone up almost 800 rupees in the last 2 months, or 1.5, 2 months. I think it went to 10,000, if I'm not wrong, came back all the way to 8,800 or 8,700, travels back to 9,200, 300, thereabouts. It gave you a chance. You saw Ashok Leyland, gave you a chance. You saw Infosys, went to 864, came back to 1,200, will again maybe give you a chance. TCS gave you a chance. So, if you travel, look at Reliance, from 880, it went to 1,000 rupees, came all the way back to 890, and again back to 1,000. So in this market that you see, within a 2-3 week scenario itself that you see, enormous opportunities, because corrections keep happening in the market, and corrections luckily are pretty deep at any point of time. So if you take the top, maybe that's why I said, maybe take account HDFC Bank or a Kotak Bank, we never saw a meaningful correction. But by and large, every single stock has seen a significant correction within a 10 to 20% range. Now 20% return on a large cap is a decent return to book in. So it's giving you chances. We mentioned Ashok Leyland, that give you a chance. It went to 160, I think 7 or something. It's traveled back to 125, may travel back to 135, I think today. Again gave you a chance to say, listen, time to get in the stock again. So, yes, theoretically, these, apart from 3 or 4 stocks which never gave you a chance, including HDFC gave you a chance. If I'm not wrong, it went down to 1,800 something and has traveled back to 1920, 1950. So just imagine that if this is a kind of churn taking place in the market in terms of price options to you to get into good quality stocks when the market is wobbly on days, it does give you opportunity. You just have to be patient. And the reason I said aggressive is because when the market corrects or becomes wobbly and large caps come under discount, you got to get in there and buy it. You can't wait to see the ultimate correction and of the market to buy something, and I don't know what the ultimate correction is. Buy, if 10 to 15% is damn good correction for large caps. So that's what I said when I aggressive, not in terms of context of the portfolio, but that's when the aggression is pounce and get in.
So exactly on that note, Ajay, I have to talk to you about one episode that was pretty much the highlight of the week. The episode around Shriram Transport Finance. Now, again, the question is this the chance that an aggressive investor needs to take, or is this a separate issue? Because the management has clarified, but the stock has been nervous, still 14-15% down for the week. It's fallen a lot from its 52-week high. Is this that chance that even this stock is presenting?
Well, I don't want to comment on the stock, but it makes me nervous because the point is that it's going to be hit on the P&L account. And that's what bothers the mid-cap story. It's undisclosed. It's unknown. There is not enough information on the table in the mid-cap balance sheet for you to make an evaluation. I'm quite sure 100% of retail investors had no clue. I'm not saying it wasn't disclosed in the balance sheet, but it wasn't on the analyst radar. It wasn't in the research report. It wasn't the risk that they were looking at. So I'm not sure whether that would fall into the large cap category. I'm talking more of the quality Nifty 50 stocks. And we saw that, see, you must understand this, that Shriram Transport, for instance, I'm not saying anything about the stock, but I'm saying it indicators are, it tried to get into a merger deal, did not happen. There's a Piramal investment into it. It was going into all kind of stuff. You start to get nervous when too many transactions start to happen on the stock and they start failing because something is being missed out by a lot of people in this one. And maybe this was the reason the merger didn't happen, or if I'm not sure if this was the only reason it didn't happen. So I am not in the school of thought to say that if there has been a misadventure and the stock has fallen, that's the place to go. I am just saying is that if there is market volatility and quality name has fallen, that's the place to go. Misadventures gives you speculative opportunity. You see Vakaranji, it went all the way, then carrying on all the way back. Okay, and and like for instance, I give you a good example, electrode industries, HEG and graphite, those stocks went down after a big run up, again given up, it must have given you at least 5 opportunities in 3 months to make 30-35% return in just that one industry, 2 stocks. So don't go for misadventures, go for market volatility, not misadventures. Don't go for the PCJs of the world or Karanjis of the world because we don't know what's lurking behind it. Maybe if your heart is large enough, you're brave enough, you may walk into Manpasand and says, how bad can it go? They make cold drinks. But well, that's a call. Our call is go for the large caps. Market is giving you chances. Don't let it go.
Okay, all right. Ajay, we're going to leave it there. Thank you very much for that advice. Appreciate you joining in on the show. and we look forward to speaking with you soon again. Ajay Srivastava there, as always, candid conversation about what you should be doing in the market. We take a very quick break here, but before we go into that break, here's some market opinion that we heard through the course of the week. Listen in. We are back with Ashwini Gujral on the other side.
What we are still building in is a pretty reasonable and robust 20% earnings growth in FY19 and a similar number for FY20. I would say that our target for the Nifty end December would probably be just flattish. I mean, I would be happy if the market holds on to where it is today.
The one thing we're watching this earnings season is whether companies start to factor in the macro headlines. So if you start to hear from companies, listen, we might take down our guidance for the second half or for next year based on trade friction, based on the fact that we're susceptible to some of these headlines, that would be a reason to get a little less optimistic on the market. The other thing we're watching very carefully, and this is one of the key trends that we think is positive, CapEx guidance has been very strong. If we start to hear corporations tone down their CapEx plans in the face of this macro uncertainty, that would be another reason to get a little bit more concerned.
And now let's take stock of all the technicals in the market. Ashwini Gujral is joining in. Ashwini, it's been a very range-bound week, and we've ended with just about, 0.5% increase. What do you make of the week gone by, and more importantly, triggers for the one that's coming up?
It's still very sideways, but today's action was much more positive than earlier when we've been at 10,800. It appears that mid caps are also kind of showing some more traction, but really we need triggers to break out of this 10,550, 850 type of range. So maybe next week, first couple of days, we could again attempt, say, 10,850, 900. You have about 100 points on the upside, and meanwhile mid caps could continue to outperform. So upper end of the range, I don't think 850, 900 would cross easily, but banks maybe have 150 to about 200 points on the upside, maybe 26, 650, 700.
I mean, generally, what is the mindset, mind frame, according to you, Ashwini, that one needs to go into next week with? Can go long, should be long?
I don't think so, because, what is paying you is to buy gap downs and to sell gap ups. And basically, there is no follow through on either side. So either you wait on the boundaries, 10,550, 600, you buy there and you get your 200, 250 point rally, or you stand at 10,850, 900 and sell from there and get your 200, 250 points lower, or you start to build a portfolio, buy Ashok Leyland, buy Century, buy these stocks and accumulate, and then wait, for the markets to turn around. Because till we have opinion polls and till we have the fresh round of triggers, I don't think we will really get out of this range permanently.
Okay, Ashwini, and what's the sense now on mid caps and small caps? Obviously, very stock specific. What would you work with?
See, again, a lot of mid caps are overstretched on the downside. Something like Ashok Leyland from 166 down to 125. Century from 1250 down to 850. So that is where some action is coming in. Something like EIL, totally hammered up stocks. So from out there, 10 to 15% upside can still be found. So possibly next 50, 100 points, Nifty, Bank Nifty may not do a whole lot, but mid caps could play catch up. But rallies again probably will be used by players who are stuck up to get out.
I mean, but again, be careful to exit these rallies as well, right?
If you can't hold for 1 year, basically, because there is no evidence that big money is flowing in or something. It is just that from an oversold zone, a lot of stocks are showing you fairly strong bounces.
All right, Ashwini, and finally, trading ideas for the week coming up?
2 or 3 stocks look good because they are overstretched on the downside, which means they are way below their 200-day moving averages. One of them is Century, that's a buy with a stop of 900, target of 945. Ashok Leyland is a buy with a stop of 125, target of 140. And EIL is a buy with a stop of 126, target of 138.
All right, Ashni, we'll wrap it up on that note. Thank you very much for joining in. Well, with that, Prashant, I will take your leave. Have a great weekend, sporting weekend this one. And of course, we'll see you.
Tennis and football, right?
Tennis, football, cricket, I mean, take your pick. Absolutely. So we're spoiled for choice. You have a good one. And we'll join you again on Monday.